Today is the 25th of July 2022. My name is David Hickson, and in today's market update I'm trying something a little bit different. It's going to be a shorter market update. I'm going to be getting straight to the point and highlighting some levels in the S&P 500 or SPX or indeed ES futures, and we're going to be focusing more on the details of what we can expect over the next few weeks. The reason that I am trying this new format is because we have a wonderful new platform for Hurst Cycles discussion, which is our Hurst Cycles Discord server. I will place an invitation to the Discord server in the description below this video, and I would encourage you to get involved in the discussion. If you have any questions about the intricacies of the analysis or alternative analysis possibilities, I would encourage you to go along to the Discord server and ask your questions there, because there are many very experienced Hurst Cycles analysts and traders in that server, and they would be happy to answer your questions and get involved in the discussion. So let's take a look at the S&P 500. This is the analysis I've been discussing for many months now. We have the very prominent trough in March of 2020, a trough that I sometimes refer to as the COVID trough, or the pandemic trough, because there is the possibility that this trough was distorted because of the fundamental events that were happening at that time, which was, of course, the outbreak of the pandemic. The important thing is that I believe there was an 18-month cycle trough over here at the beginning of October of last year, and that we have recently experienced the 40-week cycle trough. And so what we are looking at now is the bounce out of the 40-week cycle trough. The useful thing about a Hurst Cycles analysis is that you can choose a time frame to look at, and you can develop an expectation of what is likely to happen. In particular, we can take a look at the previous 40-week cycle and consider the M shape that the cycles formed in the market, and develop an expectation as to the shape that the next 40-week cycle will take. As mentioned, of course, we have an 18-month cycle trough over here at the beginning of next year, and our expectation from these two 40-week cycles that will play out in that 18-month cycle is that the second 40-week cycle will have a more bearish shape than the first one. The reason for that is because the 18-month cycle was rising during this period of time, and it will be falling during this period of time. And so if the next 40-week cycle is going to be less bullish or more bearish, then we would expect a shape something like that to develop. Let's zoom in and consider some details. First of all, let's consider the composite model line. This is a tool in Sentient Trader that takes all of the information from the analysis on the chart, recombines it, and produces a line that tells us what we could expect to happen if the cycles continue to beat with the same wavelengths and the same amplitudes. Here you can see that same fairly bearish M shape that I plotted a moment ago. The important features of this bearish M shape are that, of course, the 18-month cycle trough expected, as you can see, early next year is likely to be lower than the trough that we have just experienced in June. The other important feature of a bearish M shape is that we expect an early peak. In other words, the highest price that we are likely to see in the next 40-week cycle should occur earlier rather than later, or certainly within the first half of the cycle. Now, the composite model line is not necessarily very accurate, particularly in terms of price level when projecting far into the future, but it is very good at defining the structure of the market. In other words, when the market is likely to be moving up and when it is likely to be moving down. So let's zoom in again and consider in even more detail what we are expecting over the next few months for this first 20-week cycle in the 40-week cycle. Here is the M shape for the next 20-week cycle. The important features to note are again that we are expecting an early peak. You might notice that the composite model line does not fall below the level of the middle of June, which was the 40-week cycle peak according to this analysis. I should point out again that these price levels are not necessarily the most important feature of this tool. The other thing to notice is the fact that price has dropped significantly below the expected path plotted by the composite model line. You can see that very clearly over here. We have price dropping way down below the level of the composite model line, indicating that the composite model line, which uses information from the analysis in the past, is proving to be more bullish than the actual price action. This means that price action has been more bearish than might have been expected. That is a really important consideration. Price action has recently been more bearish than might have been expected for price bouncing out of a 40-week cycle trough. Why could that be? In my opinion, it is because a peak of at least 54-month magnitude formed at the beginning of this year. I presented this in last week's update video, so I would encourage you to go back and take a look at that. The important point is that if a 54-month cycle peak did form at the beginning of this year, then that means that the 54-month cycle is pointing downwards. The 18-month cycle is, of course, also pointing downwards, and so we have quite a lot of bearish pressure. That bearish pressure is resulting in a very disappointing bounce out of this 40-week cycle trough. Let's zoom in again and take a look at some important levels to watch over the next few weeks. The important thing to note about the next few weeks is that, of course, price is expected to form a peak fairly soon, and then it is expected to move down into this 80-day cycle trough, which is expected in about the middle or perhaps the third week of August. Let's start with the 20-day FLD, a very useful tool in my opinion. As you know, we tend to track a sequence of interactions between price and any FLD. That sequence of interaction plays out, as I've discussed in previous market update videos, with an A category interaction here, a B, and then a C category interaction at the beginning of July. This was then the D category interaction as price came down into the 40-day cycle trough. Here is the nest of lows for the 40-day cycle trough, which I spoke about in last week's update. It is still my opinion that the 40-day cycle trough formed over there in the middle of July. Our E category interaction occurred when price crossed back up above the 20-day FLD. As a matter of interest, this D and then E category interaction combination was a fairly bullish one, indicating that we could expect price to reach up and achieve the target of this price cross, which is 40.35. Price has almost reached there, as you can see. I wouldn't be surprised to see price reaching it. And then our next interaction will be the F category interaction, where price is expected to cross down below the 20-day FLD on its way down towards the 80-day cycle trough. There is another interesting FLD to be watching at this point, which is the 40-week FLD. The reason this is an interesting FLD is because this FLD should provide resistance. However, in my opinion, it is unlikely that price will reach up to the 40-week FLD, given the recent bearishness in the price movement. Or I shouldn't say bearishness, but as mentioned, the fact that the price bounce out of the 40-week cycle trough has not been a very impressive bounce. It is not impossible that the price move upwards will catch a little bit of extra steam and rise up towards this 40-week FLD, but certainly this FLD is where I would expect it to find some resistance. How can we identify the expected peak? As I've mentioned, we're expecting a peak to form fairly soon, and then price will move down into the 80-day cycle trough. So how can we refine our identification of the peak? One method is to use a VTL, or valid trend line. In order to do that, I find it useful to influence the analysis slightly and to actually force Sentient Trader to position the 40-day cycle trough where I believe it occurred. Let's take a look at that chart. Here is that chart. As you can see, I have pinned the 40-day cycle trough below the low price point at which I believe it occurred. And in terms of identifying the peak of the 80-day cycle, which is what we need to do, we could watch the 40-day cycle VTL. When price crosses below the 40-day cycle VTL, that would give us confirmation that the peak of the 80-day cycle has formed in the market. However, as you can see, that is not a very useful VTL. And it is not impossible that the 80-day cycle trough will form at a level that is actually above the VTL, or only at about the level of the VTL. However, over the next few days, we are likely to find a very useful VTL, which will be the 10-day VTL. That is a VTL that will be plotted from this price trough to the trough of the 10-day cycle. As you can see, that 10-day cycle was expected at the end of last week, or it might be occurring about now. As soon as that price trough does form, we can plot a VTL under it, and that would give us confirmation that a peak of the 20-day cycle had formed, which is very likely going to be the peak of the 80-day cycle. There is a VTL of the 5-day cycle, as you can see, which has been plotted from this trough over here to this trough of the 5-day cycle. However, when price crosses down below this VTL, it would only confirm that a peak of the 10-day cycle had formed, and that might not be the peak of the 80-day cycle. I do hope that you found this shorter market update interesting and useful. As mentioned at the beginning of the video, if you have any questions, please come along to our Discord server for Hurst Cycles. Follow the invitation in the description below the video. And of course, you are also welcome to ask any questions you have in the comments below this video.